So Sheetal, like one of the reasons that we're talking today is really just to reflect on where we are now, but also really talk about how businesses can start formulating their business plans, forecasts for the future, both for their own decision making, but also to access some of the funding that's out there. Um,
Yeah.
for me, it would be really useful to talk to you about your experiences actively doing that with your clients and how they're building their plans, how they're building their forecasts in a really practical way. So, without further ado, over to you, mate.
And it's actually quite a useful conversation to have because we've now spent 3 weeks with our clients looking at all the government support packages. We've started now to get the CBIL applications out.
Mm.
Yeah. Touch wood, we've had 100% success rate with our
And
CBILs.
your experience of speed of turnaround. The first thing is
Yeah.
I'm going to make the assumption that you've had the success rate because the quality of your applications has been
Yeah.
good.
Yeah.
How quickly are they turning around the sort of thumbs up? You've got it.
Anything under 250,000 is
Mm,
easy for the banks. Yeah. Because there's no personal guarantee
okay.
required because
Yeah.
that changed a few weeks ago. And we're finding if you give them the right information in the right format, really clear, so the bank can act on it quickly,
Hmm.
I reckon we're seeing approval of the loans in about 5 working days.
That's phenomenal. That actually is
Yeah,
phenomenal. Yeah.
yeah, especially, yeah,
Even though the numbers of approvals are quite low in the press, obviously we're just starting out, right?
we're just
That
starting out. Yeah,
but
I
as
think
I said, those, then there'll be more coming out of it.
yeah, and what's happening is it's so first of all, start point is go through, right now there's loads of checklists on the government support, including
Yeah.
CBILS grants. Yeah.
Yeah.
Go get yourself a checklist, see what applies to you. Yeah. A really good thing is the grants have been coming out quite quickly from the local council. So that's giving businesses breathing space.
And the grants are up to what,
Especially
25,000? That's sort of
25,000. Yeah, yeah, based on rateable value. There's a £10,000 grant and a £25,000 grant. Yeah. That's going and that's giving people breathing space because of the furlough. Because with the furlough, you still have to pay your employees. Yes,
so
the
that
cash has to come
allows you to
from.
potentially to pay them out of that grant whilst you wait for the cash to come
Yeah,
in.
yeah, yeah. A very good thing the government done was MTD. I know accountants were pulling their hair out.
Make tax digital.
Yeah, I know initially accountants were pulling their hair out, but what's happened now is that you should have up-to-date financial information because everything is digital for that registered businesses. So you've got to make sure you've got your latest financial statements approved, financial
Mhm.
statements, and then management accounts of up until just before COVID happened. So I would say January or February. At stretch, you can do the December accounts. Yeah.
Yeah,
So you
but
need
normal
management
trading
accounts.
environment information. Yeah.
Yeah. Doesn't have to have loads of assumptions, depreciations, and stuff. It's here's your income, here's your expenses, here's where you rough management accounts. Yeah. And again, most businesses should be in the position to pull that out of their accounting system. You then will need an up-to-date listing of all your creditors,
Who you owe
including
money to.
suppliers, who you owe money to. Yeah. And that includes suppliers. Yeah. HMRC, credit cards, everything. Supplies is really important. A list of all your trade debtors, money that's owed to you. Yeah. You got to think, okay, they might not be able to pay you now. Yeah.
Mm,
But as soon as you come out to it, that cash is going to come back in. And that could help settle all your bills,
yeah.
including your deferred tax. Yeah.
Well, it
So it's
feeds into your
really important.
projections. You've got two
Yeah.
things there. So you've got your income, your debtors, the money that's going to come
Yeah.
in, not from normal trade, but what you're owed. Um,
Yeah.
and then you can break down when's that going to come in and how's that going to come in.
Yeah.
But then also you've got your creditors, everyone you owe money to, and that's your list that's your list of, well, I've spoken to the revenue, when am I going to have to pay them? And what
Yeah.
do I owe them today? And this all filters into your expenditure plan going forward as well.
You've got your last financials, you've got your management accounts till just before this come in. You've got your outstanding debts that's owed to you and you owe. Yeah.
Yeah.
So that's three pieces. Now the final bit is your forecast.
Mm.
Yeah. Now a lot of these businesses probably might not have financial directors. They might not have all these complicated spreadsheets. They might not even have access to a really good accountant. Yeah.
Mm.
So what we want to try and do is make this as simple as possible because even the banks are not accountants. Yeah.
No, no.
So that forecast has to be pretty accurate because it has to support your decision. Yeah, whether you put money in or whether you go to the bank or whether you go somewhere else. Yeah, but it has to be simple. So
Mm.
what we've been doing, we use a package called Zero. Most of our
Yeah,
99% of our clients are on Zero, and they have this thing called Budget Manager. So what we do is we download the P&L as at that date. So
yeah,
all your income lines and expense lines. We don't get a template that has loads of expense lines, yeah, that you
yeah.
need to read into. Just what's
No,
already there
just use so
existing.
just use so your clients are fortunate, and actually a lot of, as you say, making tax digital means a lot of businesses have put their
Yeah,
data on
yeah,
a cloud accounting package. So just
yeah,
download the profit and loss account
yeah,
showing what they're using as categories
yeah,
already. Don't try and
yeah.
create or anything clever with it.
Exactly, exactly. And then what we do is we use it from a cash accounting point of view. Here's the income, cash coming in,
Yeah,
yeah, and here's your expenses going out. Nothing complicated.
on a month
Yeah,
by
on
month
a
basis.
monthly basis. Yeah. At the bottom, you have your cash from the bank that you started with,
Yeah,
any money that's going to come in from suppliers before it all went pear shaped,
yeah,
and then any suppliers you're going to pay. Yeah.
yeah.
And then your cash carried forward. That's it. Nothing more
Really
complicated.
simple. Yeah,
You
money
don't need
started.
HPs, you don't need
Yeah,
loans, you don't need any of that. Yeah.
yeah,
Because it's all on hold anyway.
yeah, yeah.
Yeah. Now, what we do is we do your income lines on a monthly basis. And you've got to think, okay, when is the lockdown over and when are you able to go and trade? Yeah.
Mm,
And you've got to put the monthly income in. And you've got to make a core assumption is when it's going to get to normal. Yeah. From day, say you open in August, it's not going to be the same as last August.
no, no.
Yeah. And you've got to make an assumption of when it's going to get to 90%. I don't think it's going to take a long time to get to 100%, but when is it going to get to 90%?
Yeah, well,
Yeah.
leading on from that, I think it's really important that every sector will have its own unique challenges. So
Absolutely. Yeah.
there, so if you take the hospitality industry,
Yeah.
when you talk about 90%, well, actually, I think, there's a lot of commentary. Well, for a lot of people, the new norm might be only 70% of what
Yeah.
they had for the next year or two, right?
Yeah.
Because behavior will change. So there's going to be a new normal. For other businesses, they may well suddenly have a big catch up and they may hit their 100% and go a bit further.
Yeah.
But yeah, and it just does depend. And I think you need to sit down and just have a bit of a think about what that looks
Yeah.
like. And
Absolutely.
maybe Sheetal, would you say this, look at various scenarios as well?
Yes. Yeah. More
Yeah,
money. Yeah. This is for you to make a decision. So try and be as honest with all these scenarios as possible. You might need help, reach out for help, speak to your accountant. But what
yeah.
we done for a chain of restaurants was we took the assumption that it's gonna lockdown's over in June. Um, July, we're going to spend ordering, getting our menus together. We're not going to open,
Mhm.
but overheads will start. Yeah. And
Mhm.
then we're going to open in August,
Mhm.
but we probably receive uh, 40% of what we done last August. It's
And
going to be slow. People are going to be scared to come out and be in confined environments.
And
Yeah.
possibly one of the things that I'm seeing as well, and it will apply to restaurants, but also in the construction sector,
Yeah.
certainly is a challenge,
Yeah.
is that I think we're still going to have social distancing
Yeah.
requirements. So
Yeah.
in a restaurant that has a certain amount of square footage, it
Yeah.
may well be that they're allowed to open, but they need to keep more space between tables, say,
Yeah.
okay?
Yeah.
And in that scenario, you're obviously reducing your turnover per hour,
Yeah.
your ability to
Yeah.
generate income, as well as
That's
having.
going to affect the amount of space you have. So your
Mm,
turnover, again, people coming out spending. B, how many people do have money to spend if there's so many people being redundant? If Chancellor Rishi says we're going to fall off a cliff and go into a recession, yeah?
mm.
So you put all these scenarios in, and then you say, okay, let's say August 40%, September 50%, and build it up as
And what does
confidence
that look
starts.
like? Yeah, that's
Yeah,
your
what does
turnover,
that look
that's your
like?
income.
That's your turnover. Now, overheads, as you just said, your overheads might go. So if you've got a restaurant, you might need to have sanitizers everywhere. You might have PPE.
Yeah,
Yeah.
yeah,
For the construction workers, 4 trips instead of 1 trip.
yeah.
Yeah. So you've got to then put your overheads in on what it's going to look like. Yeah. With a gradual easing of the lockdown.
Mm.
Yeah,
Mm.
and also you've got to put in all the costs of you preparing to open your business.
Mm.
Yeah.
Mm.
Just because on the 1st of July you're opening the business doesn't mean all the staff are going to be ready. Your suppliers are you're going to be stocked up and everything. Yeah. It's going to
Yeah.
take some time. Yeah. So you've got to put all them costs in. Yeah. You have to make your assumptions on furlough. Yeah. Because again, we don't know how right now it's 31st May. Yeah.
Mm.
I am putting assumptions on furlough that it will go up to July when I'm doing our forecast, and the banks are happy with that.
Mm.
Yeah.
And
Well,
I don't think that's unreasonable. And the other thing, to be honest,
yeah.
when you look at your assumptions about restart, depending on the
Yeah.
nature of business,
Yeah.
labor's a big variable cost here, right? So
Yeah.
if you're a
Yeah.
restaurant and you have fewer tables that you're going to support, you may need, you need fewer waiters,
Yeah.
you need fewer staff.
Yeah.
So one of the costs that you probably would have to consider is if you're going to have to make redundancies at the end of the furlough period.
Yeah.
Not everyone's necessarily going to come back from
Yeah.
furloughing. Um, Hopefully they do, but
Yeah.
that's not always the case. Again, these are costs that are going to hit your monthly expenditure, right?
Yeah,
And
yeah, yeah, yeah,
factor into your
absolutely. Yeah,
financing requirement.
yeah, yeah, yeah. And that's a really big thing. That's a whole bit of redundancy and the costing and everything. Yeah. But yeah, so you put that in. Yeah. Then what people have been forgetting is actually the VAT that you were due to
Yeah,
pay last quarter. That's actually been deferred. It's not gone away. Yeah.
yeah,
So when is that due? Say February 2021.
yeah.
Yeah, the PAY, the self-assessment, yeah, corporation tax. That's now starting to come into your cash flow. Doesn't have to come immediately, yeah, and it won't be there for the first few months when you're trading, hopefully if it goes as normal. But come January 2021, not only do you have to pay the corp tax, VAT, and PAY on the current trade that you're doing coming out of this, you're going to have to do the backdated deferred taxes as well.
Mm.
So they got to be put in. And suddenly, the HP that you got told you weren't didn't have to pay for 6 months, and that loan you didn't have to pay for 6 months.
And the landlord, that you've
The
agreed a bit of
landlord,
a repayment
that's got to
holiday.
come in. So what our suggestion is, it might be January 2020 when you got to put all the deferred payments in.
So now,
Yeah,
so
and
now we're extending out for quite a cash flow. Whilst the next 3-4 months are quite critical in terms of
yeah,
understanding the survival point, now we're
yeah,
looking at sustainability, recovering and
yeah,
sustainability,
yeah, yeah, yeah.
and that's 18
And
months, isn't it? Now we're starting to
yes,
project out.
yeah, and then so I always we've been doing 18 months to 2 year cash flows because that's when we're seeing the cash flow turn positive
Mm,
majority of the time.
mm,
Yeah, so it's so then it works out is the survival, the money you need for survival, and that's what they say this the loan is for.
The
Yeah,
C bills, the
so the CBIL,
grants, all
yeah.
those things. Yeah.
But it's also like I think we had a talk with Steve that you're gonna once it goes to stability, yeah, back to trading as normal, you're probably gonna need to dip in again as well.
Mhm. And you've
Yeah,
got to service whatever your obligations that
yeah,
accrue, whatever you take on. So you might
yeah,
take on loans or, you know, there needs to be a serviceability of that. The banks
yes,
aren't going to
yeah,
lend money.
yeah,
A director wouldn't be wise necessarily to invest a lot of money in a business where they can't see getting it back. I mean, these are essentially investor type decisions.
yeah, yeah,
Um, you might not look for a huge return, right? We might not be,
yeah.
the banks aren't necessarily looking to make a fortune out of this. This isn't, this is about survival. But
Mm,
how much are you exposing yourself to? How
yeah.
much is the bank? And we need to see it coming back. Um,
Exactly. Now with the 18 month, and so when we started doing these cash flows, we were saying, yeah, back February it's normal. Then when we started putting in all the actual deferred stuff, all the loans that need to be paid back, we're looking at 18 months, 2 years. But we're still getting that positive number at the bottom. Yeah,
yeah,
after all that. And that's the key. Yeah,
mm,
is getting to that state that actually it was a good business before it all went. Yeah. Yeah, you are in trouble now and you do need help. Yeah, but it's not
yeah.
because it's a bad business, it's because of the circumstances. Yeah. And getting that help will get you back into being normal 18 months to 2 years from now.
Just as a final thought, if you have these projections and you're doing this and you're making those applications, it's important to. It gives you a plan. It gives you a map, right?
Yeah.
It's a rough map, okay? But what you need to do is revisit this
Yeah.
periodically as we get through
Yeah.
this. And let's say lockdown's shorter, right? Okay, now we can bring forward some of those numbers. How does this look?
Yeah.
And constantly monitor that. A lot of software have that ability once you do it, but frankly, even if it's a spreadsheet, you can sit down and go, what did I think it was going to be? What is it now? And why is there a difference? And how will
Yeah.
that extrapolate forward?
So that's what we used to call in a management accounting language is the variance analysis. Yeah.
Yeah,
From your
yeah.
forecasts and your budgets, actuals, and there's a difference. Why? Can you tell that story? This is why what I said earlier is try and keep the same account lines as your financial statements or your bookkeeping and accounting system when you're doing the forecast. Because then it's going to be easy to compare actuals with your forecasts.
It's what
If
you're
you're
familiar
using
with.
yeah, but you don't have to go and pull and rejig all the figures again. Yeah.
Mhm.
A good thing about Zero, if you use the budget manager facility, you extract to an Excel, do all you need to do with your assumptions. If you use that facility, you can import it back in and it will give you the budgets versus actuals.
Yeah,
Yeah.
I mean,
Variance
this is
analysis. So
really
yeah.
good. This is good stuff, and seek help to do it. This is a
Yeah.
good opportunity to do it, um, and don't be afraid of what it's telling you. It
Yeah.
is, the purpose of it is then you can,
Yeah.
whatever the answer, you can plan for it. You can plan
Yeah.
for what you need to get. You can plan for how you need to structure your business.
Yeah.
You potentially need a plan B too. You might need to say, okay, this
Well,
isn't
that's the
going to work.
next step. Plan B, I think there was another video where I had a query from one of my clients saying, look, this is a really good business, but I don't have the historic data. Yeah. I've just started this, but I've put so much time and this is a very good business. Yeah. What do I do now if I don't have access to finance? Yeah.
Well, that's a whole
Which
other
can,
video.
yeah.
We can do that next time. And I think it's
Yeah.
important to
But
know
this
that
is a
there
lead
are
up
other
to
plans.
it. Yeah.
Yeah. No, that's fantastic, Sheetal. I think that's been really useful for me.
Yeah.
Your real life experiences, your current working environment, what you're doing. It's great to hear that banks are providing quick responses.
Yeah.
Um, and it's great that your clients are getting that template that they can take going forward.
Yeah.
So let's talk about Plan B in the next one,
Yeah.
and
Definitely.
take it from there. That's awesome.
Okay.
Thank you.
Brilliant. Take care.